Welcome to the SALT Charitable Trust update. This workshop will provide an update on the status of the regulations required to implement the 2018 SALT Workaround Law. You'll also have the opportunity to meet the new DLGS leadership. Our speakers for this workshop include Melanie Walter, Cynthia Lindsay, Jason Martucci, and Christine Zapicchi. Melanie Walter is the new acting director for DLGS and previously served as a deputy attorney general who hopefully didn't prosecute any of you in this room. Director Walter has been very proactive in meeting with finance officers and other local government stakeholders, and I thank you for taking the time out of your busy schedule to be here today. Cynthia Lindsay is the new Assistant Director for DLGS and previously served as the Comptroller and Chief Financial Officer for Atlantic City. Ms. Lindsay is also a qualified purchasing agent and former GFOA Executive Board Officer. Jason Martucci is the Legislative and Regulatory Affairs Officer for DLGS and serves as the department's designee to the Government Records Council. Mr. Martucci is also an attorney admitted to practice law in the state of New Jersey and District of Columbia and is a certified RMC. Christine Zapicchi is the acting bureau chief of Financial and Authority Regulation and Assistance for DLGS and is in her 36th year of service with the division. Ms. Zapicchi began her career with DLGS as the first female auditor in 1983. And has worked her way up the ranks during a remarkable career. I would like to thank our speakers for being here today, and please make sure you scan your badge for CEU credits. Thank you.
Thank you all for being here to hear us out today on SALT. I know there's been a lot of questions and concerns as this process has developed, and so I'm excited to have the opportunity to present our regulations and their implementation to you in this setting. I know how important the work that you do is to the state and to the communities that you represent and work with, and I hope that this will smooth the road for us all as we move forward to implement these new charitable contributions laws. The division released the SALT charitable contribution regs last week, so this is pretty new for all of us, but I think between the local finance notice and what we're presenting here today, we should be able to get us all started on the right foot. One of the things that I think is the place to start with this is that this isn't really a new concept, right? This is something that's being done on a very large scale here for the first time in New Jersey, but something that we've had after Sandy for charitable contributions to donate to specific types of repairs. That's something that we've had. Other states have had programs where you do charitable contributions as an offset for school funding. So the model exists other places. It's just the first time that we're really trying it out like this and like this here. To that end, we've gotten a lot of questions already from people about how this interplays with the new federal rulings that are coming down and the proposed regulations. Something that's important to note is that they don't actually interact. The charitable contribution law establishes a tax credit program in the state of New Jersey. The only question is then whether the IRS is going to allow deductions on the basis of our credits. That doesn't have anything to do with implementing the credits themselves, but it is a question of how it's going to be treated externally. And to that end, we're guided by our Attorney General and by the Governor. The Attorney General has promised that if there isn't that if the credits aren't going to be treated as deductions, that he'll be taking the IRS to court. Now. Yep. That's all right. We'll keep going. Catch up with me when you can. Or should we all right. The charitable contribution law was signed into effect on May 4th, 2018. It authorizes municipalities, counties, and school districts to establish one or more charitable funds for specific purposes. Implementing the regulations is going to be something that's going to start now, so it can become effective for this tax year. But generally speaking, when you set these up, what you're looking at is a potential of either a 90% credit or a 15% credit. The director, me, can make those adjustments to other percentages if the towns see fit. And we're happy to talk with you if you think that a 70% credit or a 50% credit or some other number is more workable for you. But as a baseline, we're looking at a 90% credit for, so every $100 deducted, you get you get $90 of credit. Now, a donor may elect to have 15% of a charitable fund credited against their property tax obligation. That was a modification that we made specifically to address the de minimis exception provided in the federal proposed regulations. Basically, what that means is if the donor elects to get a 15% credit, they're going to be seeking to fall within the de minimis exception and get a 100% deduction from the IRS. Again, the only question here is how much is the IRS going to let you deduct, not what the credit is. That's established, and we're very comfortable with that within the state. When you go to set up a charitable fund, it's purely elective. This is something that the municipalities, their governing bodies, and the counties need to think about and decide if it's a course that they want to pursue. A charitable fund is created by ordinance if you're a municipality or by resolution if you're a county. When you decide to move forward with a charitable contribution fund, it's really important that you report that to the Division of Local Government Services because it does change some of the processes that we'll be doing on our end, and so we need a copy of that for our records. We have provided model ordinances and resolutions to establish a charitable fund on our website. One of the things to really pay attention to with that is the language about disclosure. You know, one of the things that's going to protect the towns, protect the individual taxpayers is disclosure here. So we really want to encourage you to model that language very closely. And a charitable fund may be for multiple purposes, right? You can either have a whole bunch of charitable funds, each one for a specific purpose, or you can have multiple that you know, wrap in all of your public works, all of your school funding, all of your playground fund. Still not up? No. Okay, never mind. All right, so we're doing this way. Charitable fund purposes can include anything from public safety and capital improvements through public works, public health, social services, and code enforcement. A charitable fund may not be established for public purposes that are solely funded by other revenues, however. It has to be something that's a part of your levy. Effectively, you can support any public purpose that's supported by your municipal levy, but nothing beyond that. And the top level cap that we place on a charitable contribution fund is dictated by the amount of that budget that's funded by a levy. So Jason will walk you through those calculations later, but that's important to keep in mind. You can't ever basically intrude upon the areas that are funded by other revenues. A public safety charitable fund is a really good example to work from. A public safety charitable fund can be used for expenses relating to police, fire, emergency medical services, your first aid squads, your Office of Emergency Management. But you can also fund a sheriff's office or a county prosecutor's office through your public safety charitable fund, which is something that people might not think of, and it's a good way to kind of group these funds together so you don't have a lot of different accounts out there. A public works charitable fund can be used for things that are routine maintenance, or they can be used for infrastructure, and you can use them for things like trash and recycling collection. So think about what packages well together when you're looking at creating a charitable fund. A capital improvement charitable fund is another category that's something that we've really looked at. It can be used for any construction, reconstruction, demolition, or alteration work that has a useful life of at least 5 years, along with the payment of any debt service that's connected with those. Now, again, though, remember, these have to be items appropriated in the budget, and that's going to be something that's going to be critical. It all has to go through the things funded by the municipal levy. Now, one of the things that really dictates the way that these have to be implemented is the limit on the property tax credit that's allowed. Prior to the beginning of each budget year, the governing body of a local unit that has established a charitable fund must establish an annual property tax credit cap for each charitable fund for the budget year, and use that prior year levy to establish the one for the current year. In 2018, because this is a new system, you can use your final 2018 levy to establish a property tax credit cap. And you have to do that on no later than the date on which the charitable fund begins accepting donations. That's your baseline. Starting in 2019, county budgets and municipalities with calendar year budgets can amend your charitable fund's annual property tax credit cap upon certification of the current year levy. So once you get your actual levy, you can make the adjustments, likely fairly minor, but still something important to consider. Your annual property tax credit cap does not limit all donations to the charitable fund. Rather, the cap only limits the dollar amount of credits that can be applied toward annual property tax bills. When you're looking at how to break out your charitable funds or to set up these numbers to work top down, essentially you're setting a cap based on your levy. And right now the threshold for that is 90%. And then within that levy, it's within each line item. So if you're setting up a $2 million fund, you're going to have, and we'll say 50% of that fund, let's say public works. You have a $2 million public works budget. You got $1 million in your public works department that's supported by your levy. That $1 million is really what you're looking at when you're doing your charitable contribution fund limits. And Jason will walk you through those calculations now in a little bit more detail, but that's really where we start from, and that's where you need to be thinking about for your baselines.
Thank you, Melanie. Apologize for the AV technical difficulties. I forgot my salt shaker prop, but nonetheless, exactly. And it's a little it's a little harder to follow, I guess, without on the screen. But it's a very important point. Every charitable fund is going to have a limitation on how much in monies that could be collected and that is based on generally, you start with the 85%. So again, you take the total tax levy and you've divided by the total budget of the municipality or the county. And that is going to get you the percentage of any appropriation raised by the levy. So this percentage, even if it exceeds 85%, that 85% is the maximum unless you get director approval to exceed that. So if you get basically very minimal state aid and your levy pretty much makes up most of your budget, and let's say you're north of 85%, you need to get approval from the director to exceed that 85%. In order to get the cap on the total amount of credit-eligible donations to the charitable fund, you would need to take the appropriations based on those specific purposes. So it would be either, let's just take public safety, again, to carry on with the example, salaries and wages, the portion of the pension line item attributable to public safety. So total line items or portions of line items attributable to public safety would be multiplied by the percentage you get in step one. So using the public safety example, where you have a $5 million levy, $10 million budget, divide them, and that's 50%, well under the 85% limitation in the regulations. $2 million, your total public safety related appropriations, both the full line item or portions of line items attributable to public safety, you multiply that by 50%. You get your $1 million cap on credit-eligible donations. You take the $1 million, the resulting $1 million, you multiply that by 90%, which is a hard percentage, absent director approval. I'll get to that in a moment. So you take that $1 million times 90%, the maximum dollar amount in property tax credits that could be attributed to the public safety charitable fund is $900,000 utilizing this example. Now, that 85%, that percentage, and then the 90% number, those can be amended upward upon receiving director approval. The municipal, county, or with respect to school district, school purposes levy is generally going to be the levy used when you're calculating the annual property tax credit cap. For those appropriations that are funded by separate tax levies, library, example, open space, the separate levy shall be utilized and measured against the total amount of that separate individual budget. For municipalities, again, with calendar year budgets, along with counties, they can amend the cap based on when they get the certified levy in 2019. Each municipality or county also has to, as well as school district, also needs to establish an individual credit-eligible donation cap. So let's take in the municipal context, you have your tax bill. And what the individual cap is, you're essentially taking it's the percentage of the tax bill that could be credited. So you have, let's just say you have there's a $10,000 property tax bill, and the donation amount is always going to be 90%. You can only get, in terms of what a donor donates, it's only going to be 90% of that total. So if I donate $10,000, I could only be credited, all things being equal, at 90%, being at $9,000. Then a separate $1,000 payment, check or otherwise, is made to the municipality as property taxes. An individual donation cap could be set at 100% of the property tax obligation, in which case, okay, if I want to have my $10,000 bill, I make would have to make an $11,000 donation in order to get 100% of that $10,000 credited. Now, we talked about the recently proposed IRS regulations. In the example we used before, if the 90% credit is elected, a donor would be eligible to receive it. Again, these are proposed regulations, they haven't been adopted. They would only be able to claim $1,000 of that $10,000 as a charitable deduction on their federal income tax. The proposed IRS regulations would allow the donor to claim the full amount of the donation, in other words, the full $10,000, as a charitable deduction only if the property tax credit is 15% or less of the donation amount. This is why in the regulations, the donor has the right to elect either a 90% or the 15%. So basically, if in the $10,000 example, again, $1,500 is credited, if the 15% option is selected and the donor receives a $1,500 credit, the full $10,000 can be claimed as a charitable deduction on federal income tax. With respect to the non-creditable balance, so you have 90%, which can be credited, assuming or 15%. Whatever that non-creditable balance is, can be used either for the specific purposes of the fund and/or reasonable administrative costs relating to, again, administering the charitable fund. The non-creditable portion that's utilized for the charitable fund's specific purpose, let's say, again, using the example of public safety, shall either be recorded as a Chapter 159 special item of revenue and transferred into the general fund dedicated to the charitable fund's specific purpose or purposes, or it can be brought into the following year's budget as a revenue for the specific purpose or purposes, which shall be spent on that purpose in that budget year and would not be permitted to lapse into surplus. The non-creditable portion that's utilized for a charitable fund's administrative costs shall be recorded as MRNA, municipal revenue not anticipated, except that in subsequent years, based on historical use of that revenue could be relied upon to record, based on a history be recorded as miscellaneous revenue. There's something called a spillover fund, which is purely at the option if a municipality or county is looking to establish as a charitable fund, and a donor is looking to make a donation. In other words, if what they're going to donate exceeds either one of the individual cap or the annual donation cap, there's a separate spillover fund that could be utilized to carry. The donation would be presumably claimed as a deduction in the year in which the donation was made, but the property tax credit could be carried forward, or the portion that's not creditable this year, that could be the creditable remaining portion of the donation can be carried forward for up to five succeeding years. Now, approved uses in a spillover fund are more general than it doesn't necessarily have to be for the specific purpose of the donation that was made to the charitable fund. The approved uses of the charitable fund must be set forth in the ordinance or resolution, and permissible uses include, but are not limited to, the payment of debt service, funding of capital reserves, used toward the reserve for uncollected taxes, emergency expenses, and generally operating expenses generally. Each municipality or county charitable fund, and if there's any spillover fund, shall have its own dedicated bank account, which shall be in a GUDPA affiliated and protected depository. The bank account shall be in the name of the municipality or county that establishes the charitable fund. Donations to a municipal or county spillover fund shall be utilized solely in the budget year corresponding to the year in which the taxpayer will receive the credit, in order to avoid a de facto situation where you're essentially borrowing against future years' revenues. So if a portion of the creditable donation carries over, like say 3 years in, or let's say you simplify it, just 1 year, over the next year, that revenue can't be used in the current year, has to be used in the year in which it would be credited. The creation of a contribution, a charitable fund, or a spillover fund does not have any impact on the property tax levy cap. On an annual basis, a governing body shall adopt a resolution setting the deadline that credited donations must be reported to the tax collector, and this goes for not just municipal, but also county and school district, in order to be applied to the next upcoming annual property tax bill. Now, the municipalities have the sole discretion over whether or not to apply a charitable donation to a tax bill that's already been issued. If the municipality elects to permit this, then they must set a deadline by which at least 1 month, from 2019 forward, at least 1 month prior to the installment due date. Except 2018, it can be sooner than that, given the rollout. Donations that are reported after the deadline that's set by the municipal governing body must be applied to the following property tax bill or the following installment as applicable. Now, the CFO shall be the administrator of a municipal or county charitable fund and any spillover fund. Responsibilities of the CFO as pertain to administering the charitable fund include matters such as proper disbursement of those funds in accordance with their specified public purposes, investment of donated funds pursuant to cash management plan, ensuring compliance with the regulations in 5:30-18, which form the main corpus of the state regulations governing the charitable funds, as well as there's some others I believe in the tax collection section of 5:33. Charitable funds may not be jointly administered. Now, this means that you can't have 2 municipalities have a single charitable fund. You could have if a CFO is a CFO of another municipality on the basis of a shared service agreement, that's permissible. That's not considered joint administration. Now, a county or school district may enter into a shared service agreement with a municipality to have their charitable fund contributions collected and processed by the tax collector's office rather than handled directly. In other words, a donor makes a donation directly to the county finance office or the school district business office. We anticipate probably in most instances where the county would go down this road, that would probably happen. Any amount that's charged by the municipality to provide the service shall come out as an administrative-related, they're administrative-related dollars that come out of the non-creditable portion of the donation to the county or the school district. There's a 2% administrative fee built in when a county or school district sets up administers a charitable fund in order to defray the cost of applying the tax collector's office, the administrative burden of the tax collector's office applying that credit. This shared service, any amount under a shared service agreement would be over and above that 2%. Bank accounts for a county's or school district charitable funds and any spillover fund must be kept in one of the, that separate account or accounts must be kept in one of the municipality's depositories if you have this shared service agreement. So again, this is, it would be any kind of front-end handling of of a county or school district charitable fund could be handled on a shared service basis. Now, in circumstances where the CFO or equivalent, in case of a school district, like school business administrator, is going to directly process the charitable fund donations, the donation shall be reported to the tax collector within 5 business days or another deadline as agreed upon. The local unit charitable fund shall provide the tax collector with the information provided by the donor, along with the copy of the donor's tax bill or the advice copy thereof. Basically, there's taxpayers who are delinquent on their property taxes, and that includes if their property went to tax sale and was purchased by an investor, lien holder, they can't participate in this. So a delinquent taxpayer cannot donate to they could donate to a charitable fund, they just can't receive a property tax credit. In the local finance notice 2018-23, we go into further detail in terms of what needs to be on a donor information form. In other words, the form that the donor provides to the local unit, to the municipality or county. A model form, just like we have a model ordinance and resolution presently on our website, we'll be very shortly posting on our website a model charitable fund information form, as well as a model donor receipt. In other words, showing the information that needs to be placed on the receipt that ultimately goes to the donor. So at the discretion of the municipality or county has the discretion in terms of what method of payment or methods of payment they'll accept in relation to a charitable fund contribution. Donors may not place any additional restrictions on the use of creditable charitable fund donations. In other words, if you have a donor that donates to a public safety charitable fund, they can't restrict it to, okay, I wanted to only go to the canines, or I only wanted to go to bulletproof vests, or to fixing a police car, or something along those lines. If they donate to if they donate to a fund that has one or more specific purposes, it can go to those specific purposes and can't be further restricted. There can't be any donor intent to further restrict it would not be honored, or cannot be honored under the regulations. Now, for credits that have been applied to tax bills that have already been issued, the credit shall be included on an electronic or paper statement that goes to the donor. If it's applied to a tax bill that is yet to be issued by a certain deadline, the amount of the credit shall appear on the bill pursuant to the law. With respect to mortgages, I won't go too much into detail on this. They're really if a donor has a mortgage, taxpayer has a mortgage, there's one of 2 ways they can go about utilizing a charitable fund. One of them is they make the donation directly, and they in turn, they deal with the municipality or county directly, and then they communicate with their mortgage holder what they donated. And then the mortgage, say the mortgage company, listen, I already paid this directly, you don't need to pay this pay the taxes, or this portion of my taxes out of my escrow. The second option, depending on, and we'll see, as the weeks move forward, what the adoption is on the mortgage company's side. The mortgage company would honor basically under the regulations, the mortgage company would honor must honor the donor's request to have a portion of their escrow donated or provided to the municipality as a charitable fund contribution in lieu of property taxes. So those are the two methods under our regulations by which donors with a mortgage can take advantage of this program. Again, it'll probably I imagine it's going to take some time for mortgage companies to come up to speed on that, and we'll continue to monitor that as it moves forward. Now, there's 4 options when a donor makes a charitable fund contribution that exceeds the annual donation cap or an individual cap. And when the donor's making the donation, they have to choose one of these options. In other words, they say, okay, if it's in excess of what could be credited for this tax year, I want the excess, or I want the portion of the donation that cannot be credited, that otherwise would be creditable, refunded to me as the donor. Another option is to authorize the transfer of the balance of the donation, the creditable donation, to another charitable fund with the local entity if one exists. So if there's a public safety charitable fund and a capital improvements charitable fund, then if they hit a cap, the annual donation cap or creditable donation cap in the public safety fund, it could then, the remaining balance could be transferred to, that's creditable, can be transferred to the capital improvements fund. And I believe it was mentioned here, but it bears repeating that. If a capital improvement fund is established, it can only go toward capital items that are appropriated in the budget, not outside of the budget. Third option, authorize the transfer of the balance of the donation to a spillover fund, if one exists, so that the credit can be carried into future years, again, a maximum of 5 years into the future. And finally, what I call the keep the change option, to allow the charitable fund to retain the non-creditable portion of the donation. And I had some examples here. Since PowerPoint's not working, I'm not going to... Okay. So basically, again, there's receipts. There's certain requirements that are in terms of the receipts that have to be on a donor receipt. That's contained in the local finance notice. So as far as reporting goes, any donation that's deposited into a spillover fund for credit against a donor's future annual property tax obligation shall be reported in its entirety to the tax collector and the municipal CFO. Once the county and school district charitable contributions are credited toward the donor's annual property tax bill, the municipal CFO shall enter the creditable donation as a debit against the county or school district tax levy and as a credit against property tax receivable. The tax collector shall incorporate all charitable fund contributions into the monthly report made to the CFO. And just finally, I'm going to hand it back over to Melanie. The donor information form and the donor receipt are both exempt from disclosure under the Open Public Records Act. Again, I encourage you to, to the extent you haven't already, take a look at Local Finance Notice 2018-23, which goes into further detail, as well as a frequently asked questions section, as well as other additional hypothetical scenarios. Thank you.
So, I know this was particularly overwhelming in the absence of the slides with the wonderful color examples. Sorry about that, guys. The local finance notice should help, and we are going to post the examples on our website so that you have the ability to work through those. A lot of them were in the LFN, but we go into some more detail on these slides, and we're hopeful that will help clarify things for you. I just wanted to circle back a little bit on this, and big picture on this is easy. The details are really hard, and we know that, and you guys are the ones who have to deal with those details. So we want to be there as a resource for you. We'll be there to answer questions. One thing that we are encouraging everybody to do is to send questions that you have in email, because that way we can keep a log and keep track and make sure that everyone's getting the same sample formula and the same documentation. And if we need to create a new form or a new disclosure, we want to be able to do that and be responsive to what you need. One of the things about this that is, I think, one of the biggest challenges is that it really restructures the way that money's passing through the whole municipality. But the advantage of the way this is structured is that it all operates within your municipal levy line item. And so that's something that makes this a little bit easier. Although we all know it's going to be a challenge, it should be something that we can work together to get through. You know, when a law passes, we implement the law, and this is a law that has great intentions. We're going to try and protect the citizens of New Jersey from federal overreach, and we're trying to let citizens donate to charitable funds. You know, you don't have to be taking a credit to donate to these funds. You could be donating from anywhere in the country. You know, if you think it's important to build a park in your community, this is a way to do that, kind of like a dedication by rider, but through this mechanism instead. And so there are a lot of real benefits to this, and it's just a matter of getting to those and getting through the hard parts. And I know that makes everybody a little nervous, and we look forward to working with you and trying to figure this out together. We'll take any questions that you have now. Thanks.
So before we take any questions, first of all, I want to thank the Melanie and Jason and Cynthia and Christina for being here today and talking about a very complex subject and working their way through the technical difficulties, which I think the White House was here and sabotaged all of our technology. So I think there's something at work here. So yes, please let's ask some nice questions like this morning. So thank you, Bill.
Bill Homa, tax collector, CFO, Township of Cedar Grove. Just some general questions, some points. Going through the local finance notice, I printed this out before I came down here. One of the things that really does concern me as both a CFO and tax collector, and it's highlighted in bold in here, please note that a county and/or school district can establish a charitable fund without independent approval from the municipality that will be applying the property tax credit. If my school district is collecting money, the county is collecting money, how am I being notified that they've just collected money against that particular parcel of property? And if the resident is paying late, how do I know that they're collecting the correct amount of interest on that delinquency?
So notification and approval are
Maybe you can get to them.
Notification and approval are two different things. This is saying that they don't have to seek permission to establish one, not that you don't have to be notified. There would be an expectation, because they're going to have to go through you for the financial aspect of it, that you would receive notification.
So what you're saying is the school in the county would have to contact our tax office indicating that they've just received payment on a particular parcel of property.
In order to apply that credit, they'll have to communicate. They have to communicate with the finance and the municipality, the finance office, and the tax collector's office.
All of this money that's being collected, is this going directly into a trust fund, or is this going into our current fund?
It's going into a trust fund.
Well, it's going to be a trust fund. It's called a trust fund, but our thinking is it would go into your current fund. This way you don't have to worry about inter funds going back and forth. You're going to create this separate bank account in your current fund for the charitable contribution.
So,
Trying to be creative. You know, you're trying to. Jason and staff and people here did so much hard work on this.
No, I appreciate their hard work.
No, I understand. We're trying to. That's why a lot of the questions. We know there's going to be a lot of questions, and that's why we would like to get a lot of the questions in writing, so that we can make sure that we address all the issues that are going to come to light. But as to your question, Bill. Yes, it's going to be a separate bank account in your current fund, okay?
Okay, so we're going to create another bank account with our bank.
It has to be a separate bank account,
And
yes.
this monies will go directly into this separate bank account.
Yes.
And then we can, at the end of the day, draw it out to pay our bills?
You're going to use this money, you're going to record this money against your taxes receivable.
Right.
Whatever creditable portion is going
Correct.
against your taxes,
Correct.
it's going to be reducing your taxes receivable. It's
Correct.
going to be treated just like tax revenue coming in, like your person's coming in paying their taxes. That's how it has to be recorded. The creditable piece.
Okay.
The piece that is not credible, the 10%, okay? A portion of that, we're not telling you, telling you what piece is the administrative piece. That's gonna be up to you, of that 10%.
Okay.
That's not credible, okay? So you're gonna take whatever you think you need for your costs, for your tax collector, for your finance officer, for whatever else you think you need the money for. And that is going to be taken through Myrna. It's recorded through Myrna, okay? The other piece, that's not the administrative piece, you're going to use to support your budget, additional appropriations to support your budget.
Okay.
You're going to do a Chapter 159. It's not, this account, this bank account, or this money is not considered a spending reserve like a dedication by rider would be, okay? It has to be brought through the budget in order to spend the money,
Okay.
okay?
Question for Jason, though. Are we going to be doing additional reports to the IRS for the money that's going into this charitable trust fund?
No.
No additional reporting.
Correct.
One other question that, as a tax collector, is in the local finance notice, we have to give a receipt to the donor from the charitable trust. And you indicate all these items that we have to capture. Are all of these items being captured when the resident is making payment?
Yes, you would have, because the donor has to provide certain information in their form that they submit, and then in return, when that donor gets a receipt, the regulation sets forth certain requirements that need to be required items of information that need to be in the receipt. And again, very shortly on our website, there will be both a model donor information form and a model donor receipt. So you won't have to.
The only thing that I can say is, my last point, you know, November 1st, it gets very busy. As a tax collector, we've got people at the window lined up. So somehow or another, we've got to capture all of this information and give them a receipt there on the spot with the amount of the donation, the date, the charitable fund or funds in which the donation was made, the block and lot, statement that no goods or services were provided in exchange for the donation, a statement that the municipality or county makes no representation with respect to the IRS treatment of the donation. So all of these have to be laid out in the receipt that we're giving to them at the window on November 1st.
Right, and again, it will be in the model.
It's all in the model sample. It's in the model sample.
And I would note that in relation to November 1st gets very busy. Obviously, it does. For one, from 2019 forward, the deadline, if the municipality, keep in mind, the municipality does not have to apply a credit toward a tax bill that's already been issued. So they could require that any credits need to be, or I'm sorry, donations need to be made and credited by a certain amount of time before the tax bill goes out, first. Second, the reason it's sooner and it's less than a month ahead of the installment due date. Okay.
Jason, here, you want to try this?
Yes, sorry about that. Apologize. Let me stand up here. Okay, thank you. The reason why, well, first, just to repeat, the standard, the default is that if a donation needs to be made by a certain deadline before the tax bill is issued. So a municipality does not have to apply charitable fund donations and credit them to tax bills that already have been issued. Second, if the municipality does wish to permit to apply credits to tax bills that have already been issued, from 2019 forward, the mandatory deadline, there has to be a standard deadline of at least a month prior to the installment due date. In 2018, that's a bit shorter, that's less than a month, only because with the IRS, with the proposed IRS regulations, with that issuance, we had to review those before we promulgated, the division promulgated its regulations.
So one thing, though, to keep in mind, and I know you all know this is not required of your municipality, your county, your school district. So I think we've got to keep that in mind. And that DLGS was charged with drafting regulations based on a law that was passed by the legislature, signed by the governor.
We're not trying to throw blame at, you know, look, you're doing your job, the law was passed, and you're doing what you're trying to do to implement it. But I think sometimes you got to think our end of it, at our tax window. Residents, I don't know how I'm going to explain it to our taxpayer.
Well, we have a tax collection specialist on staff who did work in a municipality. So we try, and she goes out. She's been going out in the field, talking to various organizations. She's been up and down the state, trying to gather as much information as possible, and when we put this local finance notice together and the rule together, try to address as many questions as possible from the tax collection end ahead of time, because we were talking to people way before this went out. So we know there's still going to be questions, because no way you're going to be able to cover every instance, every problem that you're going to come across. But Margie's her name, Margie Saharic is our tax collection specialist.
Whenever you have a new program, especially one of this scale, implementation is always a challenge. We're aware of that, and that's why we wanted to present to you today right after putting the regulations out and to provide the local finance notice in advance. And we hope to be able to respond to frequently asked questions in a public format, which is one of the reasons we're looking for written submissions, because we know implementation is going to be a challenge. Something that we are trying to do to address the issue of the early, the lines at the tax window is encouraging people to come in early. One of the things that does that intrinsically is the fact that the tax bills are, that the credits are limited. So depending on what you set your credit threshold at, there might only be 10 people who can do it before you fill up your threshold. There could be 1,000 people. It depends on where the threshold is set by the municipality, and that does encourage people to come in who want to take advantage of the program.
I think one more. I think we're good.
Well, I have a
Yeah.
few questions.
Okay. All right.
Susan Corrado, the CFO of Tenafly and the tax collector there too. One question, this is probably an easier one, would be if a tax payer comes in and their taxes are $10,000 and they have that 90% rule and $9,000 will be credited against their tax, the other $1,000, can they take that as a charitable contribution on their tax return? The other $1,000 that you're saying has to be, you know, they could donate $10,000 towards a charitable contribution, $9,000 can be applied. What benefit do they get to have that extra $1,000 as a charitable contribution? Can it be taken then as a charitable contribution?
Well, with respect to the question being, at what, so if there's $10,000 a donation, 90, and they elect, the donor, if I understand correctly, elects the 90% credit. Under the proposed IRS regulations, keep in mind they haven't been adopted, and if they, in the event they are adopted and they're challenged, we don't know what a court will decide. Under the proposed IRS regulations, and this is a big part of the reason why in our regulations and local finance notice and what municipalities will be communicating to the taxpayer, we make no representations as to how the IRS will ultimately treat a charitable contribution. Now, so I think really, as far as, that's why, again, you have the 90% and the 15% election in the, and I think the rest of it is explained probably in more detail in the local finance notice than we can go into here, so.
So my next question is, let's say the school gets, you owe them $60 million, they get $5 million in charitable contributions. Why wouldn't there be some kind of mechanism where our liability to the school would be $55 million and giving us more control over how it's handled, so that instead of this 5-day you have to be notified, how are we going to track what somebody else is getting in contributions? We'll lose control over that.
It's deducted.
It is deducted.
Yeah, the school doesn't get any more than what they're, so the school doesn't get any more than what is their levy that you're already paying for. So the charitable contribution portion, if the school elects to do this, that amount is deducted from the amount that you transfer
So
to the
it's
schools.
deducted from our liability to them.
Same with the county.
Okay, my last part of this is, I'm confused about if you have a budget for, let's say, police for $5 million, and then somebody in your budget appropriations, it's $5 million, and then you get a charitable donation or multiple charitable donations to public safety for police, and you made a comment about applying it to whatever, so you could apply it to maybe salary and wages or whatever you want to do. How do you do I want to know all the accounting for this. I've asked several times about the journal entries and how this is going to work. You already budgeted and appropriated $5 million for police, and you're setting up a trust for these contributions. I want to know how the accounting.
So first, when you donate to a fund, you're donating to the fund as a whole. That was what Jason was saying about how someone can't specify that they want to donate to just the police dogs in the fund. It's the whole fund. So, and the fund's basically up to an amount specified by the municipality and set by the regulation. The percentage of that fund that's supported by the municipal levy. So as far as the actual entries, I'll turn it over to Tina, but I just wanted to be clear that when you donate, it's to the total fund, it's not the components of the fund.
Right, but how are you actually using it for public safety?
So the accounting part, we understand that that is quite complex. And
Right.
that's what really we want to know. So my suggestion is we could put an example out on our website to take it through the balance sheet is best that we understand it as well. But I don't know that it's any different than you're applying your taxes. You just have to have that, those transactions, you know, your revenue comes in, those are applied to your current taxes, and your expenditures are current appropriations. The same mechanism is happening, it's just that collateral entry, that extra collateral entry that has to be applied to move the trust fund charitable contributions over and apply them towards your current year taxes. That's the way we understand it.
Are you going to put something out on the website?
Yes, unfortunately, we had that in the slides today and broke it
Okay.
out there and just weren't able to get them up on the screen.
Okay, thanks.
So I know this was a mammoth undertaking by the division, and I appreciate you having the courage to be here today and talk about this. So if we could just give our panelists in the division a big hand for being here. So thank you.